2026 is not just another year for the US financial market. It's a transition year where interest rates, regulations, crypto, and global money flows all change direction at the same time. If you understand these shifts early, you stay ahead. Big picture, economy and interest rates. The US economy in 2026 is expected to grow steadily, not fast and not slow. Inflation has cooled compared to previous years, and because of that, the Federal Reserve has already started easing interest rates. This matters because lower interest rates generally support stock markets, reduce borrowing costs, and improve business confidence. But stability doesn't mean zero risk. Markets remain sensitive to inflation data, global conflicts, and trade policy changes. Stock market and banking sector. US stock markets going into 2026 are still led by technology, artificial intelligence, and financial companies. Big banks are in a strong position after years of tightening regulations, and recent policy shifts are giving them more flexibility to lend and trade. That said, stock valuations are already high. This means markets may rise, but reactions to bad news could be sharp and sudden. Bond market shock, Treasury rule changes. One of the biggest and least talked about changes for 2026 is happening in the US bond market. New SEC rules require most US Treasury trades to move through central clearing systems by the end of 2026. The goal is simple: reduce hidden risk and prevent future financial shocks. This directly affects banks, hedge funds, and large investors, and indirectly impacts crypto and digital assets, a turning point. Crypto in the US enters a new phase in 2026. Instead of unclear enforcement, the government is pushing toward structured federal regulation, especially for stablecoins, exchanges, and custody providers. Regulators like the SEC and CFTC are coordinating more than ever before. For the first time, major institutions are allowed to use regulated cryptocurrencies as collateral in approved markets. This signals one thing clearly: crypto is moving from the shadows into the financial system. Other key rules coming in 2026. There are more changes under the surface. New taxes on certain international money transfers. Adjustments to bank leverage rules to improve market liquidity. A shift toward fewer but more targeted regulatory enforcement actions. These may sound technical, but they affect capital flows, currency movement, and financial stability. Risks to watch. The biggest risks in 2026 are geopolitical tensions, delays in regulatory implementation, and sudden inflation surprises. Markets are stronger, but also more interconnected than ever. 2026 is not about crisis, it's about restructuring. Moderate growth, evolving regulations, clearer crypto rules, and a redesigned bond market. Those who understand these changes early won't just react to the market. They'll stay ahead of it.